Hello and welcome to the Business Interview. I'm Marcus Carlson. Economic growth in Europe is coming to a near standstill, and many European countries are suffering under the weight of tough austerity measures. That's the message from the International Monetary Fund in its latest regional economic outlook for Europe. The IMF is painting a gloomy picture, and it warns the Eurozone's sovereign debt crisis could lead to even more pain. For more now on this, we can speak to Antonio Borges. He's the director of the IMF's European Department. Thanks very much indeed, Mr. Borges, for speaking to us today. In your opinion, what's the risk of another recession in the Eurozone?
Well, we expect a significant slowdown in economic growth, and when that happens, the risk of recession is always there. However, our base case is still of some moderate positive growth in 2012. Now, of course, there is also a possibility of a certain level of difficulties in the banking sector. We talk about a possible credit crunch, and that might indeed increase the risk of recession considerably, which is why the IMF has been recommending a change of policy, especially in the banking sector.
Now, what happened, though? In the first quarter of this year, we saw strong growth, and the recovery seemed to be going along just very, very nicely indeed. What happened after that?
You're right. There was very good growth at the beginning of the year. And furthermore, the European economy on average is actually quite solid, with good balance, no current account problems, public finances moving in the right direction, and so forth. The problem is that, number one, there was a slowdown in world trade, which is visible. And as you know, many European economies, starting with Germany, are very dependent on exports. Second, there were significant problems in the United States of America. I think what happened in the U.S. is of great concern to the whole world, but also to Europe. And furthermore, over the summer, and perhaps as a consequence of the U.S. problems, we noticed that investors became much more risk-averse than they were before and moved away from risk. There was a lot more of what we call the flight to quality, which has hurt many European economies in a visible way, and which has undermined confidence to a certain extent. All of these factors together explain why we are in the current situation.
Now, the IMF has argued for recapitalization of European banks, which in itself has sparked a sometimes heated debate. I suppose it's fair to say that. How much money do you think the European banking sector will need?
Well, depends on how you look at it. I think there are several ways of looking at this question. The most important element is to restore confidence in the banking sector. Many European banks are fine, they are well managed, they have good profits and so forth, and yet investors seem to be concerned and are moving away from them, which as a consequence then prevents these banks from having access to markets and fund themselves. This is what we have to reverse, and therefore to restore confidence. This does not need a great deal of money, and furthermore, today we are in a different position from where we were before, because the European Financial Stability Facility can contribute to increase the capital of banks. So it is possible to put in place a European solution, which is what we would recommend, and contribute with a significant amount of capital to all European banks of a certain scale, which we think would restore confidence in a very considerable manner.
I want to press you a little bit on that, though. How much money are we talking about here? You say that it will be a significant amount of capital. Just give us a ballpark figure. Is it more than 100 billion euros? Just to give you a figure there.
It's probably more than 100 billion, certainly less than 200 billion. And both numbers are extremely small relative to the size of the European economy or the European capital markets. So we don't have, or the resources of the EFSF. So I think this would not be a problem in itself. It's more an issue of having, number one, the European determination to make it happen, and number two, to do it in a way that will indeed restore confidence.
Do you think that European politicians have underestimated the dangers of the Eurozone debt crisis? That's a criticism that have been raised by investors.
I don't think so. I think everybody is very much aware of what is at stake. I think policymakers have an obligation to remain calm, even in difficult situations. And I think there is strong determination to move in the right direction. One should never underestimate the implications of the summit of July, in which the European governments, all of them, said that they stood behind every country that was in difficulty. on condition that these countries stay on track and do the right thing. So these are very important commitments, and we think that will be quite a key part of finding the right solution. But in parallel, we have to make sure that all the countries that are in difficulty also put the right policies in place.
But we just saw Eurozone ministers delay a decision whether or not to pay out another bailout tranche to Greece. What do you make of that decision? Was that a good one, really, to delay seeing the market reaction?
Yes, it was a wise decision because there is no rush. The Greek economy or the Greek government at the current time does not have pressing cash needs. The next big payment on Greek debt will not take place before December, and internally they can certainly manage their budget in a way that will not create any difficulties for the next several weeks. So we don't expect any immediate urgency in Greece, which is a very important point. And therefore we should take all the time to put in place the right measures, the right policies, and make sure that the economy goes back to where it should be. That's more important than anything else, especially when there is really no urgency in terms of cash.
There's an ongoing debate, though, on what kind of a haircut, just coming back to the banking issue, on what kind of a haircut banks will have to take if Greece enters into a default. The banks have already agreed voluntarily to take a 21% haircut. What do you say about the figure that they will have to take as a haircut in the future? There's talk of 50%. Do you think that's a likely number?
I don't think anybody is talking about a Greek default. And in fact, let's keep in mind that what was planned in terms of private sector involvement in the Greek situation is based on the assumption that there will not be a default. There is a great deal of government money that will be used for guarantees of the Greek debt, and so this is completely incompatible with a default scenario. So for the time being, we're still working on the assumption that the July 21st plan is in place, that Greece will be back on track, that the support from all European governments will be there at much more favorable conditions than before, and therefore that the private sector involvement that has been defined will be applied. Some corrections may be needed because interest rates have changed, markets are not the same, and therefore the conditions of the plan may have to be adjusted here and there. But for the time being, that's the plan we have.
But what about the number, though? At 21% haircut, which is where we are at the moment, that's the number that has been fixed, and that's the number that European banks have agreed to. Do you think it will be higher than that?
I cannot make any prediction on that front because, as I'm telling you, since markets have changed considerably, most likely the program will be adjusted. But the European assumption has been, and that's the plan we still have in front of us, that everything that will happen on private sector involvement will be of a voluntary basis and therefore will be agreed with the banking sector. That is the current plan, and I don't think there is an intention to immediately change it.
But just to press you a little bit on that, now, when banks hear and when private investors hear that there's going to be adjustment to the program that has been put in place, there's a lot of fear out there. That's sparking a lot of concerns. What do you say about that?
I think there's nothing to be said at the current moment. The concern I would have is if the Greek economy does not go back on track. And then we cannot predict what the final outcome will be, and I think that's what markets are worried about. If the Greeks put their economy back on the rails, if in fact they take all the measures that they are expected to take to restore growth and restore confidence, I think there's good expectation that the plan that was in place in July will be the plan, and under that scenario there's no reason to be more concerned than before. Now, of course, if this is not the case, then the situation might change, but nobody today is expecting or planning for that kind of change.
All right, Antonio Borges from the International Monetary Fund, thanks indeed for taking the time to speak to us, and with that we're going to wrap up the program. Thanks for watching France 24.